Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Great to have you with us here at ausbiz. Let's check what happened on Friday where markets finished. Well, US inflation stabilised in April, buoying global investor sentiment on hopes of interest rate cuts by the Fed Reserve. On Wall Street, the S&P 500 ended higher on Friday, while the Dow recorded its biggest daily gain since November, as month-end repositioning drove a late rally. But the Nasdaq was flat. Overall, stocks were down for the week. However, for the month, the S&P 500 rose around 4.8%, the Nasdaq close to 7%, and the Dow climbed 2.4%. Now, stocks specifically on Friday, Doyle shares plummeted after the company forecast current quarter profit below market forecast indicated that it's under margin pressure as it faces higher costs to build servers to meet heavy AI workloads. Zscaler shares jumped after the security solutions provider forecast fourth quarter results above estimates. Marvell Technology fell heavily after the semiconductor company missed analyst expectations for quarterly revenue and earnings. Apparel retailer Gap surged after raising its annual sales forecast and its first quarter results beat market expectations. And shares in Trump Media and Technology Group fell after former President Donald Trump was convicted of falsifying documents to cover up a hush money payment to a porn star ahead of the 2016 elections. Well, the US Personal Consumption Expenditures Price Index increased 0.3% in April, matching the previous month's figure, while on an annual basis, inflation rose 2.7%. Consumer spending, which accounts for around two-thirds of the US economic activity, increased 0.2%, down from a 0.7% rise in March. US Treasury yields fell in response to the data, with the 10-year down to 4.5% and the 2-year at 4.91%. And the US dollar was lower also, notching up its first monthly decline for the year. The Aussie trading at 66.5 US cents. The euro edged up after data showed price pressures in the Eurozone picked up faster than expected in May, rising 0.2% for the month and 2.6% year on year. French, German and Spanish inflation figures all came in slightly higher than expected, although markets are still pricing in a rate cut by the European Central Bank when it meets this week. Well, let's get across what is moving at a macro level, how that's influencing investment decisions right now, in particular ahead of those central bank meetings. Anthony Doyle joining us from Firetrail Investments. Anthony, great to catch up with you again. Thanks for joining us. So clearly...
Thanks for having me. Cheers, Andrew.
It's... Inflation obviously remains in focus and the central bank response, but this week, in fact, we've got the Bank of Canada and also the European Central Bank meeting with expectations they're both actually going to cut.
Yeah, well, that's right. You had the Swiss National Bank actually cut rates earlier in the year, and they're seen as a bit of a bellwether for the European Central Bank in particular. And the great news is that those interest rate hikes that came through in 2022 and 2023, certainly there has been an impact there, which has allowed the central banks to build up significant policy ammunition that they can deploy. Now, what's really interesting this time around is they'll be cutting due to lower inflation rather than a significant weakening in labour markets. So that's overwhelmingly good news for the global economy, and certainly global growth expectations have picked up, really the result of analysts revising higher their expectations for the US in particular. So the US certainly one of the strongest economies globally, and with the ECB, Bank of England, Bank of Canada potentially cutting rates by the end of the year, this has seen risk appetite really return to global equity markets.
So, Anthony, you underline the economic strength we're seeing there at a global level, certainly in the States. But if a central bank sees that it's necessary to actually cut rates, is that not a sign that it's worried about economic weakness?
Probably more fine-tuning policy settings. Certainly, they were very aware that inflation expectations had been rising as a result of not only the COVID pandemic, but also obviously the increase in gas prices as a result of the invasion of Ukraine by Russia. So Europe in particular has felt higher inflation more than others. The UK specifically had Brexit in 2021 as well, which has resulted in higher inflationary pressures there. So it's more of a fine tuning of policy, Andrew, rather than a significant deterioration. And if you cast your mind back to what has actually resulted in recession, they haven't died of old age. They've actually been murdered. The expansions that we've experienced, whether it be the GFC or whether it be COVID. And certainly central banks have many policy tools at their disposal that they can deploy should they wish to extend the business cycle further.
So, Anthony, that said then, with your outlook for interest rates, also that economic strength you talk of, what is your view of how supportive that will be for equities?
I mean, there are some significant tailwinds for equity investors, and they've really been persistent over the course of the last 18 months. So if you're investing on the back of a view that there could potentially be a recession or geopolitical events, or that you're expecting a stagflationary environment, I mean, for us here at Firetrail, that's really something that you would invest via policy insurance. You know, it's a low probability style of event. What is more dominant today is not only for risk appetite that the central bank put is back, that central banks can reduce interest rates should growth materially weaken or should labour markets start to exhibit significant signs of weakness. You know, what really matters is that economic growth is stronger and inflation, disinflationary pressures should resume. And as a result, we've seen equity markets, you know, since the bottom in October 2022, you know, they've risen around 45% since then. And that's really seen investors miss out on some significant upside in global equity markets. So those tailwinds continue to blow strongly. And what matters for equity markets in the short term is that central banks can deploy stimulus, and they will do so with inflation no longer being at significant levels that would prohibit them from cutting rates.
So, Anthony, which equity markets do you want to be invested in there at Firetrail?
Well, it's really interesting. I mean, if you're thinking about the strongest equity markets this year, how often have you described Japan and Europe as having the best performance in a calendar year? I think that hasn't occurred too frequently together. So for the S3 Global Opportunities Fund, we aren't investing from a top-down regional basis. The regional allocations really come out of the bottom-up stock selection that the portfolio managers conduct, and that the great ideas that the analysts uncover across the globe. So we're really market weight the US today. As a result of that bottom-up stock selection, we're overweight Europe. That's where the most attractive valuations can be found and the most significant upside over the medium term in terms of our stocks in particular. And then finally in Asia Pac, we're actually underweight Asia Pacific at this point in time.
Anthony, let's get a little more stock specific. Ones you're liking at the moment, the first one being Micron Technology, the semiconductor company. Tell us why.
Well, everyone talks about NVIDIA, Andrew, and this is a stock that's actually outperformed NVIDIA since February. And there aren't probably too many stocks that can have that sort of performance profile over the course of the last couple of months. Now, in terms of GPUs and CPUs, we all talk about the AI beneficiaries, but the tools that they're developing, we're going to see a significant upgrade cycle in terms of the hardware that's required to run the AI tools that firms like Microsoft and Alphabet are developing. So that really plays into Micron in particular. You know, there's three dominant players in this market of GPUs and CPUs, SK Hynix, Samsung, and Micron being the only US listed player there. And as you can see, really seen now as a significant AI beneficiary, and it is the largest position in the S3 Global Opportunities Fund and actually a significant contributor to performance and the alpha we've been able to generate over the course of this year.
And I see another stock you're interested in is Booking Holdings. That it obviously under its stable has Booking.com is the big one for it. Agoda also has rental cars and the like. What's your bet here? Is this based on what we're seeing with travel?
Well, Andrew, when you think about Australia, there's very similar trends at the consumer level in the United States and other developed markets as well. And what we're seeing is a real bifurcation of those that are doing well out of a higher interest rate regime, and that those that are really feeling the pain. So what we're seeing is that the wealthy and boomers in particular, from a demographic perspective, are actually finding that for the first time in many years, they're generating positive real returns on defensive assets or term deposits, and they are actually spending like drunken sailors. Whereas those that are really feeling the pinch, those that have young kids or have a significant mortgage, or if you're a renter and you're seeing rents increase significantly, they're the ones that are actually pulling back on spending, and discretionary spending in particular. So what we're seeing is that travel is very much an aspirational item or an aspirational good that can be consumed, and travel bookings are significantly up, but also restaurants as well. And so this is a bit of the confusion that I think many are experiencing from a top-down analysis perspective, expecting that interest rates would plunge economies into recession. But when you talk to the companies themselves and build up your outlook for the consumer from a micro basis, it is certainly a scenario where those that have the discretionary income, they will continue to spend. And as we see in terms of where that spend is going, it's really on travel and experiences, and that continues today. And we still remain pretty optimistic about the outlook around bookings.
Anthony, great to catch up with you again from Firetrail Investments. Thanks for joining us.
Cheers, Andrew.
Let's just take a look at where we're likely to get going on the first day of the trading week, and we can see it's going to be a positive start according to SPI Futures, up 0.5% there, certainly off the back of what we saw on global markets on Friday. Stay with us, the open is just a couple of minutes away.